Hello everyone, welcome to this week's weekly trade plan. This is week beginning the 8th of April 2018. My name's Tim and I'm more than happy to take you through this week's pre-recorded webinar. So for those of you that are perhaps new to this particular webinar, it's really about our understanding of multi-time frame analysis. Obviously the markets are closed over the weekend, so it gives us a fantastic opportunity to take stock of what is happening in the price and often enables us to plan for the week ahead. So it adds extra confirmation to some of those trade ideas. So we'll be taking a technical look at weekly and monthly timeframes and looking to identify the important highs and lows and genuine levels of support and resistance that we can look to use over the during the live trade rooms for the remainder of the week. So as always, we'll be observing our main 15 liquid global markets. So I suppose it's worth, from a general overview perspective, I mean, I'll put up our risk warning. Please make sure you're aware of the risks involved in trading the financial markets. But in terms of a general overview, often when there's sort of major global developments, the markets like a certain degree of stability and reassurance and confidence in terms of what may lie ahead. Now, with the US starting, certainly a verbal trade war, initially with potentially Europe and subsequently with China, that is quite an unstable situation for the financial markets. So what we've really experienced over the last week is unfortunately more of the same kind of choppy market conditions, which are not great for not just for us and for our style, but for traders generally. So just before I go and explain all of these markets individually, why do we look at multi-time frame analysis? Well, there's a number of reasons for it. Firstly, you can see more clearly what is happening and who is genuinely in control of each market. And that's very, very important, because what we want to do is basically trade in line with the overriding directional bias in whatever market we happen to be trading. So we want to go with the flow. We don't want to be looking to scalp the highs, or we don't want to be counter trending to any great extent. We want to go with the majority of the volume of that market and carefully selecting, obviously, opportunities to navigate and get in and out of these markets. But if you can see clearly what's happening, because sometimes if you just work within one time frame, it can get so choppy that you've really lost a bit of a sense for what the overall view on the market conditions actually are. So it can definitely help with that. Also, the larger the time frame, the more important a genuine level of support and resistance becomes. So if we see the market bouncing back to a weekly or a monthly low, then it's very likely that your technical traders on a global basis are also seeing that level. They understand the importance of those levels, and they look to trade those levels slightly differently than perhaps a daily level or an intraday level, for example. And then finally, second from last, it can show you the important levels where a market is likely to move towards as well, so we can use it from a take profit perspective. And don't forget, as well as looking to the upside, you can always look to the downside as well, looking at the shorter time frames, because that can certainly assist with the identification of things like trend reversals. So if you see very strong reversals in smaller time frames, and you get a bit of follow through on your daily charts, for example, then you're really sort of stacking more odds in your favor when you trade those markets. Okay, so let's get straight into these charts. And like I said, the prevailing sort of opinion is that most of these markets are very much range bound. They're just bouncing from highs to lows. We're not getting any continuation either to the upside or to the downside. And as you can see, with a lot of these markets, price is currently in between levels of support resistance. Excuse me. And the dollar index is just a really good example of it. We're threatening to push lower. We keep getting these bounce backs. So very difficult market conditions, to say the least. So from a weekly perspective, we have to continue, well, firstly, to acknowledge what's happening. I mean, this is not price action that is that tradable. Certainly, it's not really conducive to our style. And in actual fact, that's fine, because most traders are really concerned with frequency. They really feel the need to be trading every day or on a regular basis. And if they don't, they somehow feel that they're not necessarily actively trading. When in actual fact, what you are doing, if you can identify market conditions, is you're actually proactively protecting your capital. So knowing when not to trade, it's a phrase and a term we use all the time. Knowing when not to trade is just as important as knowing when to get into markets. So by us sort of identifying sideways moving markets, not really wanting to get involved in that kind of choppy price action, actually preserves capital, because we're not jumping into markets that are reversing. And don't get me wrong, we've tested a couple of markets. But in terms of volume of trading, we'd like to get into approximately 1 trade per day. And as you can see, over the last week, we just have not been able to. So it's just the market conditions. They go through tight periods, and then they go through quite loose and open periods. And it's just gauging and waiting for those opportunities to reveal themselves. So we just have to practice patience really for the time being. We can understand the market conditions. We don't need to force the issue. We don't need to try and get into these markets which are telling us they're in periods of indecision. So they can't even decide themselves what they should and shouldn't be doing. So you're getting buyers and sellers caught up in this sort of tussle. And this is sort of price action that, we've learned over the years to make sure that we just tolerate. And that's an important sort of tool for any consistently profitable trader, is to really identify those times and periods which are very, very difficult to trade. And we just happen to be going through these periods currently. So with the dollar index, sideways moving market, we have monthly and weekly highs. So we're still going to work with the 90.86 to the upside and the 88.13 to the downside, meaning it's only if we get a break of these levels would we be considerably interested in potentially getting involved in this particular market. Now we would, and a lot of the rhetoric and a lot of the sentiment behind this market is suggesting maybe this major decline since December 2016, one very, very devalued market over the course of the last year and a quarter has been very much to the downside. And when you get these big moves, you often get periods of consolidation. Now, it's got 2 major decisions to obviously take eventually, depending who wins out between buyers and sellers. But there's a sentiment to suggest that, if we get a break above that 90.86, that we could actually get a reversal of this move and potentially a nice little bounce. How long we'll get that bounce for, we obviously very difficult to tell. Are we just going through a period of consolidation and break the 88.13, and then we are just further to the downside once more? And I'll zoom out just so you can see the downside a little bit more. So if we break this 88.13, we are looking down to the $84, $85 level. Somewhere around here is the next level lower. But there's every suggestion that this level coincides with a significant level of support. And if you get a reversal of that support, that could constitute potentially an interesting bounce in this market as well. So the thing is about sideways moving markets is that although they may be frustrating to sit it out, you normally get really nice explosive moves off the back of a consolidated market. And we're talking about breakout trades. All trends start from a consolidation. So if you can imagine, if we start getting a break above 90.86, the sentiment changes for the dollar. A lot of financial indicators start to become very, very positive, and there's a lot of arguments for that to be the case. This might be an incredible price to start getting into more of a long-term view on the dollar. And I am conscious of a year and a quarter of devaluation. So it might sound a bit silly, but this could be the beginning of the next leg to the upside in the dollar. And I do appreciate it could also be the next leg to the downside to the $84 level as well. So we can trade this market both sides. So these are one of these markets where you don't want to get emotionally attached to it. So we don't mind if it breaks higher, if it breaks lower. We're going to sort of trade the conditions and see if we can capture a move in either direction. So that's the dollar index, and unfortunately the same applies across a lot of the dollar pairs, and you'll see what I mean in shortly. So we do have these sort of lower levels of support and these higher levels of resistance, and we are trading, we're getting a bounce off those levels, and we are trading sort of above. So we want to wait and see. The non-farm payroll numbers weren't particularly that great, so we might even expect the dollar to sell off over the course of the next week and certainly a few days. So we shall, and that would mean a bounce off this level of support. So we don't really want to be trading within this range to any great extent. You know, you might capture a 2-day, sort of 3-day move, but it's just the risks associated with those trades are just a little bit higher. The exposure to the downside is probably a little bit too great. So again, consolidated market moving sideways has the potential to squeeze up from these levels. So if that's the case, might be opportunities to sell from these higher levels if we can get that opportunity again. But yeah, just need to watch these levels for the time being. On a weekly time frame, it's the same story. We'll have the 25.54 to the upside and the 21.54 to the downside. The pound is quite an interesting trade. You can see what's happened to this market since January 2017. So we're talking about, it's been in a bit of a bull trend for the last year and a quarter after this period of consolidation, and then we got that nice extended move in the pound. So it has been a strong currency over the last year, and you can see this this trend line, the lower one, and then you can see how it splits off, and it just creates an additional level of support as well. And you can experience that from time to time. And look how this price has bounced off that level pretty neatly, and you know, completely. We had on Thursday of last week, we had a really selling candle, and I suppose it's worth pointing out as well on a daily time frame, if I just get up my pen, that ordinarily a trade like this, where you get the close beneath that level, is a structural failure and you're likely to get a little push to the downside. The only thing that was made this trade untradeable, let's say, is this ascending line pushing prices and supporting prices to the upside. So we would ordinarily like to trade this kind of price action, but as you can see, you don't want to sell a market above levels of support, and that's exactly what we would have been doing. So we had to sort of back off. We did know and fully aware the non-farm payroll figures were out, and you know, you could get any kind of print in those figures. So it makes it a little bit more challenging, certainly. But from a technical perspective, it was a bit of a no-brainer. Got to sit tight, got to be patient. And in actual fact, if we get a break above this high for the next few days, we are likely to see this market at least attack the 143. However, we'll be looking at these highs. We'll be looking at these highs, and of course the 143.43 as well. And if you get a break of this level, certainly down to and you get a break of this ascending line as well, you could get a nice, really sizable trade to the downside if we start seeing some strength come in to the US dollar. So that's the pound dollar. We'll have a look at just the weekly charts there. So we're going to continue to work with those levels, 143 to the upside and 137.10 to the downside. Pound yen, you can see how these weekly levels and monthly levels can be quite useful. Let's have a look at it on the, we'd look at this candlestick on Thursday and suggest, yes, we have broken above it, but we did retrace 50% of that move. Does that fill us with huge confidence? No, it doesn't. Going into non-farm payroll, you know, the common sense decision to make in this situation is, right, well, this is not tradable conditions. So it allows us to just sort of back away from the market a little bit, because it is a structural failure technically, but it doesn't quite add up. It doesn't quite stack up for us. And as you can see on Friday, we had a little bit more indecision. So we've got this sort of bearish spinning top candlestick just in there on Friday. So indecisive, not the kind of, we're not surprised really. It's kind of in keeping with markets elsewhere. But what we will do is we'll work with the new high. So to the downside on the weekly, we'll work with the 104.63, but we'll definitely work with a new high, which this market has. As you can see, the last week's high was the 107 level exactly, and the market broke above it. And as I've just explained, some of that has been retraced, and we've actually closed below the 107 level. So the close of the market was 106.94. That is quite important and quite telling from a technical perspective in this market. And what it allows us to do is to just back off from it, not be so aggressive. We really want to cherry pick and wait for the right conditions, especially during markets of indecision, which is kind of what these markets are like right now. And I promise you, there's traders, very, very profitable traders, that find these markets really challenging and really, really difficult. So it's not just us. It's not just it's a lot of the trading community, certainly on the retail side for sure. So the close of this market is 106.94. The high is the 107.48. So we're just going to change this high very quickly. 107.64, I think I said. Yeah, no, I got that wrong. The high is 107.48, excuse me. So let me change this once more time. 107.48. So that's that level. It's just a weekly high really that we're working with in that market. The dollar CAD, some strength came into this dollar CAD, and you can see the break below the ascending line, some consolidation for 2 weeks, and you can see over the last few days this market threatening to break lower, and a little bit of indecision last couple of days in and around this 127.64 level. So you can see that level of indecision there. We backed off from it because we're actually potentially looking to take this market to the upside if we get the correct conditions. So knowing the market conditions is the first thing, then having a directional bias. And in actual fact, we're looking for opportunities to potentially buy this market to the upside. But there is a series of caveats to that. But we do have a directional bias, and it's in keeping with this sort of original move. However, this is, for all intents and purposes, this is a structural failure to the downside. So really, it might present short-term more opportunities to sell this market than it does to buy it. But because it doesn't fit with kind of our approach and what we'd like to do, then we've just backed off from it a little bit. So we're going to continue to work with the high there. In fact, I'm going to work with a brand new high actually. So the high of last week's candlestick is 129.42. The week before, 129.38. So only 4 pips difference between those highs. So I'm going to take that 129.42 to the upside. 129.42 to the upside, and to the downside we'll work with the low of the 127.31. $127.31. So that's the dollar CAD. Moving on to the New Zealand dollar. So daily price chart moving sideways in keeping with everything else. Looking at the weekly chart, this is horrible price action. So we're happy to just be standing back from this over the last few weeks. So to the upside, 0.7353, and to the downside, 71.52. Moving on to the euro yen, again, sideways moving market. Let's look at it on the weekly. We're still working with these highs. It's threatening like we're going to get a bit of a reversal off this, a bit of strength coming into the euro. But we are very conscious. We've got 3 weekly highs just above the last 3 weeks highs. So it's actually got to work a little bit harder to the upside for us to be looking to actively trade that market. The euro pound next. You can see this range-bound market that's likely to continue, although we're looking like we're threatening these lows again. And it'd be interesting to see what happens around the 86, 67, because that might constitute an interesting opportunity and major kind of reversal of this big move over a few years, where the euro strengthened against the pound. And we might see a little bit of pound strength coming back into this market, certainly below the 86.67. So we'll just watch this market quite closely. And we are in a long period of consolidation since last summer. So those are the market conditions. We accept that, and we just look to be very patient with this market if we can. Okay, moving on to the global indices next. We've got a few moving averages in here, and we've just got a 200 period moving average on a daily time frame. And the reason why that's quite interesting is just because that's looking on a more medium and longer term basis. It's a very important indicator, let's say, if for those that do use moving averages. And you can see what's happened to price around this kind of region here. It's become very choppy, pushing higher, pushing lower, squeezing higher again, and it's now threatening like we're going to be trading. Well, we currently are trading below that level, and we got this indecision with on the global basis with regards to this trade war situation, and some of these markets really need a little bit of excuse me, what's the word I'm looking for? Some stability. They want to know where they're heading and what they're doing. And right now, it's just indecision, bit of indecisive price action, and that just allows us to just step back for just a little bit. On the daily time frame, we have the weekly low at the 25.86. You can see these markets are sort of threatening to break lower and close lower, and they were all unable to do so before looking to squeeze higher. So so what we'll do is we'll look at this on a weekly time frame, and we will continue to work with these lows to the downside. So let me zoom in a little bit on this. Let's work with this weekly low. So the low is 51, sorry, the low is 25.51. So 25.51 the downside, and we work with actually last week's or 2 weeks, the high from 2 weeks ago in this market, which is the 26.79. $26.79.50. Right. So those are our new levels there for the S&P, which is not a bad thing. We are still marginally trading lower. Did it give us an opportunity to sell it? No, it didn't. We still have these weekly highs. So, so we've got this sort of bearish spinning top here on the weekly time frame. So we work with this high and low, just a little bit more suitable now. So the low is the 23.307. 23.307 to the downside, and we'll work with last week's high as well, 24.593. So 24.593, and you can see in itself, like when we talk about indecision, this is a classic indecision candlestick, and it's a weekly candlestick. So there's a lot of buy and sellers and a lot of volume within a week's trading action, especially on a major global indices like the Dow Jones, and you can see the outcome. You know, what this candlestick means is a massive question mark. Are we pushing higher or pushing lower? The market itself does not know. So it's up to us as technical traders to understand that and to know that and make decisions accordingly, I guess is the best way to put it. Okay, the FTSE 100 next. Yes, nice explosive move to the upside. So we have seen a bit of a short-term bounce. Very erratic behaving market. and we just got a confirmed break lower before we start getting a bounce back, and it just makes us a little bit on the nervous side from a price action perspective. And you can see we've got a 2-week sort of push to the upside. What was quite interesting is where the price continued to close, which is actually very close to the high of 3 weeks ago. So again, that's quite interesting, and that's why looking at multi-time frame analysis, you might think, yeah, there's some fantastic opportunities there, but let's see what happens on a weekly time frame, and you can see this market pulling back to this weekly level. So so we'll continue to work with the 67, 65 to the downside, and we will work with a very marginal new high of 71.46. So let's change this one, 71.46. So there is actually an argument to look to work with these lows. In fact, that's exactly what I'm going to do. I'm going to take this low here, which is the 70.17, and bring it up from these lows. 70.17. So basically, if we get a confirmed break above the 71.46, it might give us an opportunity to push higher. And if we break below the 70.17 level, it might give us an opportunity to capture, maybe a shorter term sell trade. So we'll just watch those levels very closely. Excuse me, sorry, I thought I was on the weekly time frame, and I can clearly see that I wasn't. So we will revert back to the previous low of 3 weeks ago. Apologies for that. So the low 76, 67, 65. So 67, 65. So we will revert back to these lows. But we'll take a new weekly high of 71.46. So moving on to the NASDAQ, then you can see the uptrend. You can see that there's we did make marginal new highs in February in this market before we got the actual move that we've seen across the other global indices a little bit earlier. So we had double tops across other markets, and this one created a new high. Then we saw the major pullback in this market. So we're looking at these lows here and trying to assess and work those out and see if there is any opportunities to take these markets lower. And on each occasion, it really struggled to break below the weekly 64.20 level on every occasion. And for that reason, it gave us the signals very, very clearly to just step back. Now's not the right time is basically what this market is telling us. Let's have a look at the weekly weekly time frame. All of these weekly candlesticks are struggling to close beneath the 64.20 level. So I'm actually going to leave this particular low because of that reason. And if we get a weekly break beneath the 64.20, it might constitute a nice, interesting move lower. However, we'll be watching this market quite closely now over the next week. Let's have a look at the high. The high is the 66.53. So I'm going to work with this weekly high. So 66.53, I believe I said, yeah. And we just work with this low of 64.20 because the market keeps failing to close beneath it. So that's quite interesting for us as far as this market's concerned. Okay, last few markets then. Gold market, similar to the US dollar index, just moving sideways. We're in between these resistance highs and supportive lows. So unless we get a break either side, we're going to leave and work with these levels. So 1365.89 to the upside and 1302 to the downside. And while this market is very choppy in between that levels, we're going to just step back and make sure we don't get involved in that too much. But with a lot of these range bound markets, what it suggests to us is it potentially gives us some really interesting opportunities in the pipeline. When we'll have an opportunity to trade them, we obviously do not know, but we will, not be jumping in our markets recklessly, exposing our capital unnecessarily when the markets are clearly telling us they're in a particular cycle now, and that cycle is very much based on consolidation and a little bit of uncertainty. So crude oil, we had this double top price action. The market is bouncing back. Looks like it's going to be bouncing back close to these levels. If we get an opportunity to buy at these lower levels, then we might look to take it. So we're just going to watch this market quite closely on the weekly time frame. You see, we had these weekly levels in this market. However, our directional bias was very much to the upside. So a break of 66.63 would constitute a very interesting opportunity to keep pushing these prices higher. And you can see the weekly time frame as well. It's come back to this fairly significant level. So let's see if we get opportunities around this kind of price point to actually take this market higher again. We're not ignoring the potential for continuation to the downside and to break this level with potentially opportunities to push the crude oil market lower as well. So again, we don't necessarily have an emotional attachment to either buying or selling it. Our directional bias is to the upside, so that's clear unless something changes. And that something changing could be in and around a structural break around this level, which means potentially a reversal and a double top. And then we'd be attacking the late 50s, the $57, $58 levels at these lows. So we do have kind of a plan of action, but it's all based around a little bit of patience right now. So we had these breaks in the 10-year note. We are looking for opportunities to sell these markets. However, they are sort of bouncing back short term. So on a weekly time frame, there's your indecision again. There's your doji candlestick. It's quite classical. So let's work with a brand new high of 121.34. $121.34. So there's that high, and we'll stick with the low of 119.64 as well. So just finally, we've had a visual close, even though this was an exchange. This was a new futures contract opening up at a lower price, and what we've seen is a very visual close of that particular price action. So it's interesting to see what's going to be happening around this kind of price action here. We still have 160.36 to the upside. If I just take you over to the weekly time frame, you can see what kind of price action it is we're dealing with. A significant pullback, a break beneath this low might constitute an opportunity to sell it, which is why I'm going to just work with this low, because it is potentially a reversal candlestick. However, we're very conscious of what happened just to the left of this, where we got the same indecision candlestick. The market actually exploded higher for a bit before turning around and making a massive move to the downside. Could that happen again? Potentially. We are looking for opportunities to sell it, so we'll work with a brand new weekly low of 158.88. So let me just change this, 158.88. And that just about concludes, and we'll continue to work with the 160.36 to the upside as well. So that just about concludes this live recorded weekly trade plan session. So hopefully that will assist you for the week ahead in terms of planning for these markets. But please do bear in mind the market conditions at all times, and we are trading and experiencing very choppy, very turbulent price action. And that is really what should be taken away from this webinar. Feel free to follow us on Facebook, Twitter, and LinkedIn. The details are there up on screen. And of course, any questions that you might have about anything we've covered, or maybe something we've said, or whatever the case may be, feel free, as always, to email us at support@thelivetraderoom.com. So on that note, all that's left for me to do is to thank you very much for joining us for this webinar. And we do look forward to seeing you all next time. And we'll see you in the live trade room during the week as well. So from everyone here, take care. Have a great weekend. Bye for now.